Good afternoon. We're getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson, and just before the 790 KBC News Blitz with Randy Wang at 5, Mottek On Money, voice of business news in Los Angeles, live on the air here on 790 KBC, streaming live online worldwide at kbc.com, and yes, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Big week. The Dow making a run for an all-time high today, then pulling back but holding on to a closing gain of 10 points at 44,922, still shy of the record high, which was last seen last December. The S&P 500, which hit record highs more recently, pulling back 38 points at the bell today at 6,411. And the NASDAQ taking a tumble today, down more than 300 points, down 315 at 21,315. The Magnificent Seven, not so magnificent today, with NVIDIA among the names pulling back. The Magnificent One in retreat today, down more than $6 at 175 and change after recently hitting a record high as well. Palantir and other tech names are taking a hit today. The earnings parade continued as well. We did get news from Home Depot's second quarter results that came in before the bell, slightly missing Wall Street analysts' expectations, but that stock did tick higher. Target will post earnings tomorrow, by the way, followed by Walmart. We're watching the retail names come in this week. Another bullish call on Bitcoin, which hit a record high last week, pulling back in the last couple of days. One of the major Wall Street firms believes the current crypto bull market could see the world's largest cryptocurrency hit an even bigger milestone in the near future, 200,000, says analyst at Bernstein. We see Bitcoin right now at around 113,000. Apple reported to be planning a push into robotics now as it tries to search for its next big hit product. Apple stock, which has seen a rebound recently, pulling back slightly today to 230 and change. Intel back in the spotlight today. We're watching that stock move higher by $1.65 at 25 and change. With an investment from SoftBank Group and rumors of a U.S. government stake, that sent that stock moving higher today. President Trump's effort to end the war between Russia and Ukraine continues following big meetings since last Friday with Russian leader Putin, followed by separate meetings with Ukraine, Zelensky, and European leaders this week. Oil back in focus, with the U.S. accusing India of profiteering from Russian oil during the Ukraine war. And closer to home, reports that California Democrats are trying to make nice now with oil companies here in the state in the face of planned refinery closures. I'll discuss the latest on that and more with oil industry analyst John KILDUFF at Again Capital and CNBC contributor. He'll be joining us live later this hour. And you've probably heard of the Make America Healthy Again effort in Washington. Well, it looks like we have something like that here in California, an effort to make California healthy again, with a focus today in Sacramento on what kids are eating and ultra-processed foods. I'll talk about that live later this hour with BERNADETTE CHIARO, head of EWG in Sacramento. But first, on your money, the markets, the economy, crypto, and the whole works now. Joining us live, Art Hogan, Managing Director and Chief Market Strategist at B. Riley Wealth, based right here in Los Angeles. Art Hogan, thank you very much for taking the call here this afternoon.
Hey, Frank, always a pleasure to talk to you.
Wonderful to have you with us here. And what looked like it was going to be a closing high for the Dow did kiss new highs today, Art Hogan, with the NASDAQ going in the opposite direction. Give us your view of things here at the moment.
Yeah, a little bit of a rotation today, and I would say a little bit of a rotation this week. So as we head into the new week, it's relatively catalyst light. So we haven't had any major economic data. The biggest news that we'll get this week, away from the big retailers reporting, will be the Jackson Hole confab, where Chair Jay Powell will have a speech at 10 o'clock on Friday. So with that said, and coming into this week at all-time highs, and it being August, the second worst month of the year for stocks, I'm not surprised to see a little bit of volatility. Volumes have been lower, and there's just no real push into equities so far this week. But I will tell you this, I think it's very normal, right? So the NASDAQ's up 40% from its lows in April. The S&P 500 is up some 30% from that low. And the Treasury curve is getting steeper, and the yield on the 10 years getting lower. And I think all of that's good. And we're starting to see investors take a peek at things like small caps. The Russell 2000 is outperforming over a 1 week, 2 week, and 3 week basis. I think that's positive. You're seeing a bit of a broadening out. While the S&P 500 was down a bit today, 6 of the 11 sectors were in positive territory. The biggest drag on the S&P 500 was technology, communication services, and consumer discretionary. So it's a bit of a transition week. It's not unusual in the dog days of summer for things to get a little squishy until we get a better reading on where we are both with the economy and monetary policy.
On there live with Art Hogan, Chief Market Strategist at B. Riley. And Art, you were watching the cryptos more closely these days. We saw Bitcoin hit an all-time high above 124,000 recently. Right now it's back down to 113,000. And some of the crypto-related names, which have seen a big run-up just over the past week, have come down bullish. For example, not living up to its name over the last couple of days after that big IPO splash last week, pulling back nearly 4 today at 59 and change. Coinbase down nearly 19 at 302. What are your thoughts about the latest action in the crypto world?
Well, very much like the NASDAQ having a bit of a correction here in the month of August, and the risk-off attitude as we head into 2 of the more difficult months, Bitcoin and the rest of cryptocurrency seems to be falling into the same place. So I think the biggest correlation, Frank, in cryptocurrency is that speculative technology market. So when the NASDAQ 100 and the NASDAQ Composite Index are doing well, cryptocurrencies seem to do well, whether it's Bitcoin or the other incumbents or stable coins or the crypto-related publicly traded companies. And when the NASDAQ Composite and 100 are pulling back, like we've seen over the course of the last couple of days, and certainly today, you see crypto do a bit of a pullback. That's on the heels of what has been a very good run for cryptocurrencies this year. We have an administration that's very pro-crypto. We have a lot of spot Bitcoin ETFs that are doing great and seeing a lot of adoption. But, we've gone pretty far, pretty fast, and to have a bit of a pullback here as technology stocks pull back probably makes sense for cryptocurrencies. I think this is just a bit of a setback, and everyone's taken a pause that probably refreshes as we get into the fourth quarter.
All right, from digital gold to analog gold, gold itself is still hovering near its all-time high, around 3,358 and change. Silver is still hovering just below $40 an ounce. Of course, gold has seen a big run-up, so has silver this year. What are your thoughts on those two here now?
Yeah, I'll tell you this. So the gold-silver ratio is getting a little bit tighter, which is good. Silver and gold typically have a ratio that's a bit tighter than it is right now. Gold's had a significant run over the course of the last 2 years. That's coming off a 12-year basing where it basically did nothing. 2 years ago, it broke out of that base. We know there are a lot of central banks around the world that want to have gold on their balance sheets, and we also know that it's easy to buy gold now, so you don't have to store it and bury it in your backyard. The GLD ETF is the best-performing commodity ETF that has been invented. It's just, it's a factor of too far, too fast. And I think as we sort of settle into the fact that the Fed is likely going to cut rates at some juncture, we think in September for starters, gold is probably going to settle down. And the other piece of the puzzle too, Frank, is that there may be some geopolitical uncertainties that are starting to get more certain. If, in fact, we're able to find a ceasefire or an end to the Russia-Ukraine war, that would certainly take one of the tailwinds away from gold. Not to say that the geopolitical uncertainty around the globe would be diminished, but it would certainly be an end to one of the things that we've been the most concerned about.
On there live with Art Hogan, Chief Market Strategist at B. Riley. What do you think is going to happen tomorrow when we get the notes from the Fed's last meeting? And Friday we'll be hearing from the Fed chairman at that big Jackson Hole symposium. And what do you think the Fed is going to do next month following the latest inflation number that came out a little bit hotter on the producer side, on the wholesale side, and obviously concerns about tariffs impacting inflation and so forth? What do you think the Fed's next move will be?
Yeah, I think that's a great question, Frank. So as far as the minutes from the last Fed meeting, it's going to be interesting because we had 2 dissenters. When the FOMC decided to keep rates unchanged, we had actually 2 different governors that decided to vote against that. They wanted to cut rates. And that hasn't happened for about 25 years. So the minutes are going to be intriguing at the very least. And I don't know how much we can tease out of those minutes about how close it was. The Fed ended up not cutting rates. But I would tell you this, Jay Powell's in a precarious position because he has never wanted to make news and certainly didn't want to sort of give a precursor to the next meeting. So I think the market may well be disappointed if he doesn't come out even a little bit dovish about September, because the market right now is pricing in about 83% chance we cut rates in September. There's a better than 50% chance that we cut rates at the October and December meeting. So we may well start a rate cutting cycle. I just don't think it's going to be announced by Jay Powell. And I think if he doesn't, in the way the market's set up with a consensus agreement that the Fed likely cuts in September, I believe that's likely true, that the market may be disappointed in Jackson Hole. Now, he may well use Jackson Hole as a place marker to say, I think the Fed should be independent, and I also think there are certain reforms that the Fed could do, like removing forward guidance, which was an emergency tool that was put in place after the great financial crisis. But I don't think he's going to give us any hints about what the Fed's going to do at the September meeting, and I think the market sees that as a negative.
Very interesting. What are your thoughts about that hotter than expected wholesale inflation number, which raised alarm bells recently, that the tariffs are going to ultimately increase inflation ultimately to the consumer as we head into the holiday season?
Yeah, well, it's going to be true, Frank, that prices are going up for core goods. So the way we look at it is like this. First and foremost, as consumers in America, we consume about 35% goods and 65% services. So that's the good news. You don't tariff services. Of those goods that are imported, we consume, of that 35%, about 15% are imported. So about 15% of our total consumption is going to see a price increase somewhere between 15 and 20% on core goods. That is going to be a one-time price increase, and that's going to crimp our ability to buy other things. So unless and until we either see more job creation or wage growth, there's going to be a bit of an economic slowdown. We started to see that in the labor market in the last non-farm payroll number. So the Fed looks at this and says, we're going to see a one-time price increase. Not necessarily ongoing inflation, but a price increase. But we'll also see a slowdown in economic activity. That is why the Fed's likely going to cut rates in September, because they need to defend their full employment mandate. Remember, the last non-farm payroll number had massive revisions such that we're only creating about 35,000 jobs a month on a 3-month rolling basis. That number was about 135,000 when we started the year. So the labor market is softening. Unemployment starts to go up a little bit, and the Fed needs to get less restrictive and at the very least get to neutral, which would mean they likely cut by 25 basis points at the September, October, and December meetings.
See you tonight. Read about it tomorrow, but hear it now on Mottek On Money, live on the air with Art Hogan, Chief Market Strategist at B. Riley. We see mortgage rates are recently hitting the low point of the year over the last week or so, and here's something we haven't talked about in a while: home builder stocks suddenly hot. Art Hogan, what are your thoughts on that sector here?
Well, a couple things. So oddly enough, when the 13F filings came out, Berkshire Hathaway showed that it picked up a very large position in one of the home builders. I would also tell you that the mortgage apps have started to pick up as the 30-year conforming mortgage has started to tick down a little bit. The yield of the 10-year has moved from 4.7% down to 4.25%. And I would also tell you that Home Depot, while they missed on the top and bottom line, kept their guidance the same, thinking that they're going to see a pickup in renovations and new home sales. I think that as interest rates come down, existing homes will start to come for sale. What will typically happen is if we get a yield on a 10-year at 3.75% or 4%, the delta between that and the 30-year fix is usually about 150 basis points. We start to have a 5 handle on the 30-year conforming mortgage. Existing homes are going to start to come on the market. We're going to see more activity. We're short 5 million single-family homes. There's millennials that would like to buy them, and folks like you and I, Frank, would like to get out of the homes that we have, but we have a 3.5% mortgage. So we just need to see that mortgage rate come down a little bit. We're going to see a lot of activity in housing, and I think Berkshire Hathaway was smart to buy the home builders. I certainly think that's going to be good for companies like Home Depot and Lowe's.
All right. What about energy? What about the oil stocks here? I'm going to be talking to John KILDUFF here very, very shortly about what's happening here in California with a couple of refineries about to be shut down. And we're watching, of course, all the geopolitical developments which impact the price of oil. What about the oil stocks here with oil hovering in the low 60s here now?
Yeah, and nobody knows the business better than John KILDUFF. He's a good friend of mine, and I'm thrilled that he's going to be on your show. I would tell you this. I think the worst performing sector in the S&P 500, energy, is very oversold. I say that because while WTI crude has been sitting in a range between 60 and 65 for the course of the last 3 months. The energy stocks themselves are reflecting a price that's much closer to $50. And I say that because if you look at the multiple on the fully integrated nationals, multinationals like Exxon and Chevron, or if you look at the oilfield service companies like Halliburton, Schlumberger, and Baker Hughes, the multiples on these stocks and the dividends they pay are as low as we've seen historically. So very unchallenged multiples. Even some of the North American E&P or exploration and production companies like Devon Energy are trading at ridiculously low multiples, predicting a global depression, or at least a recession, and some sort of breakdown in demand for energy. And I don't think there's going to be a breakdown in demand for energy. I think our demand for energy is only going to increase as everyone wants to get into artificial intelligence. We're going to need to power that. It's either going to be through LNG that we're going to sell to Europe, which I think we're going to be the number one producer of LNG and the number one exporter of LNG, or it's going to be through natural gas, or it's going to be through a combination of a lot of things. But I think that concern about the supply and demand equation in energy is way overdone. I think energy is probably going to be the best performing sector in the fourth quarter of this year.
All right, we see the major averages still near record highs here. Is tomorrow going to be the day where the Dow hits an all-time high? And have you put any targets here on how the rest of the year plays out?
Well, I would tell you this. The Dow has been held back because it's a price-weighted index. And as you and I know, there's 30 stocks in it. They tend to be more value-focused, but they also tend to have expensive prices. So when you have a couple of those names that are expensive stocks get hit real hard, like we did with UNH, United Healthcare, or Apple this year, it's a big drag on the Dow versus the S&P, which is a market cap-weighted index. So in the Dow, the larger your price is, the more impact you have on the Dow Jones Industrial Average. In the S&P, the larger your market cap is, the more impact you have on the S&P 500. So that's been the drag on the Dow. Of late, over the course of the last several weeks, UNH has caught a bid, again because 13F showed that Berkshire Hathaway was a buyer of that, and Apple is starting to see a resurgence. I think the Dow has crept back up and likely will join the all-time high club with the S&P and the NASDAQ probably over the course of the next couple of weeks. It's just been held back because the way the math is done. It's a price-weighted index, and it's been dragged down by two of the largest components. I think it's on the right path to make a new high. I suspect we're going to see that before September.
Any specific places where you are putting money now and or taking it off the table?
Geez, Frank, I've never heard that question from you before, and I'm awful happy that you're able to ask me that today. So here's one thing I will tell you, and we just talked about energy. The other sector that I would tell you still isn't reflecting the tailwinds that it has, and that's the financials. So financials are a big beneficiary of interest rates coming down, and that certainly seems to be happening. But they're also a beneficiary of deregulation, and we certainly feel that's starting to happen. We're starting to see more IPOs, more M&A activity. We're going to certainly see financials have the ability to use more of their balance sheet to do things like buybacks, pay dividends, and certainly lend more money. So I think financials is going to be one of my favorite sectors. The one thing I've been concerned about in this rising core goods environment is you want to probably overweight consumer staples and underweight consumer discretionary. I only say that because we're going to have a little bit less spending power in the back half of this year. We're going to want to invest in things that are things that we need versus things that we want. So if you were to put on a pair straight, I would say you want to be long consumer staples and short consumer discretionary.
Fantastic, Art. Thank you very much for taking the call here and covering all the bases. It seems like the analysts there with you were very satisfied. They must have been all ears. I didn't hear any barking from the King Charles Cavalier Spaniels, who were very popular on Art Hogan's social media feeds. Art, thank you very, very much for joining us live here this afternoon.
Thanks, Frank. It's always a pleasure. And both Ziggy and Maverick were snoring during our interview, so that's why they kept quiet.
Wonderful. We look forward to seeing them on social media ASAP. And thank you very much, Art Hogan, for joining us live here this afternoon. And let's check your ride now here at 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Close but no cigar. The Dow making a run for an all-time high. Kissed a record high intraday once again, but then pulled back. Still held on to a closing gain of 10 points at 44,922. Looks like it got as high as 45,207. During the trading day today. The S&P 500 did end lower, down 38 at 6,411. And the NASDAQ tumbled 315 points, 21,000. 315 as the Mag 7 names took a hit today, including the Magnificent One. NVIDIA down more than $6, back to 175 and change after hitting a record high over the past week. Intel in the plus column up $1.65 at 25.31. Possibility of Uncle Sam helping Intel out. Palantir among the casualties of the day, down more than 16 at 157 and change. Taking a look at Bullish, which had that big splash on Wall Street last week with its IPO, not living up to its name for the second day in a row, down today, down nearly 4 at 59.51. Apple, which has seen a pretty good rebound recently, down 33 cents today at 230 and change. Checking some of the oil names, which we'll be talking about shortly. Valero moving higher by $1.12 at 137 and change, and ExxonMobil at 107.42, up nearly $1 today. Checking the cryptos now. Bitcoin pulling back from its record high, back down to around 113,000 now. Ethereum back down to 4,139. Doge at the moment at 21 cents. Gold right now hovering at 3,358 and change, and silver at 37.81. And now the latest news on 790 KBC.
YouTube personality Benny Johnson has cracked the code on a new era of newsmaking.
Very controversial, very strong opinions. A person who speaks truth fearlessly, breaking for nobody.
It's a new cultural landscape.
We're not trying to politicize this. People are primed now, and forgive me, dude, it is what it is. Here's what's going on in your country, bro.
The Benny Show.
Get ready if this is something that you needed to put a little pep in your step. No? Yeah? Okay.
Follow and listen on your favorite platform.
Welcome to NFL Flag.
Are you ready? Yeah! Are you ready? Yeah!
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it!
Chase the big time.
Get that, ladies!
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Mottek On Money continues, 790 KBC. Have you seen these predictions? Maybe $8 a gallon gas coming soon here in California. This because of a couple refinery closures. Phillips 66 announced in October it would shut down its Los Angeles facility by the end of this year because of concerns about the sustainability of the California market. And in April, Valero declared it would close its Benicia refinery next year. It looks like all these refinery closures now accelerating the pressure in Sacramento. Even Governor Newsom and Democrats appear to be coming around on the fossil fuel industry after bashing the oil industry for years. Joining us live now is John KILDUFF, oil industry analyst at HOGAN Capital and CNBC contributor. John KILDUFF, thank you very much for taking the call here this afternoon.
Thank you, Frank. Great to be on with you again.
Wonderful to have you with us. Art Hogan says hello, by the way, and we're watching closely what's happening here in California. Also, the geopolitical scene very much active as well, and that will impact the price of oil. Give us your assessment of things here at the moment.
Well, at the moment, Frank, we're sorting out any number of things, particularly as it relates to the Russian situation primarily. And it's my opinion that what these secondary sanctions, these threats against India, because of their substantial oil purchases over the past year now from Russia, is what got President Putin to the table. This whole thing went down because Putin was finally going to get hit with sanctions that were going to be meaningful and harmful to the Russian economy. President Trump pushed hard on that pressure point, and it worked. So we're waiting to see how that sorts out. You can see the price of oil rise by a couple of dollars and go down by a couple of dollars whenever we see that India may be hit harder or less hard by the Trump administration's secondary sanctions. So that's what we're waiting on to see what plays out. That's why crude oil has been stuck right around here at about the $62 level.
On the air live with oil industry analyst John KILDUFF at HOGAN Capital and CNBC contributor. It's been an eventful 6-7 months now following Iran's nuclear program being blown away by Israel and the United States, and that was a nervous time. And it looks like the ceasefire between Israel and Iran is holding, and of course we're watching all the world hotspots very anxiously. But oil at 62 here and change. Where do you see the price of oil go from here?
I'm a little concerned, Frank, because OPEC has been putting more and more oil on the market every month, and we haven't been able to break $60 a barrel. The demand is good. We're heading into the peak demand season globally. That's the winter season. We're seeing a ramp up. We're seeing China buy more and more crude oil on the open market above and beyond what they're getting from Russia. So we're in a tough spot here right now. We're at the height of the hurricane season. I'm sure your listeners have heard about Hurricane Erin here on the East Coast, and there's more behind her. So we're waiting to see how that plays out. So we're in a difficult spot right now. I do think the trend will go lower as we get into late September, October for a while. But I'll tell you, we're on the knife's edge here. Anything could upset the balance and send us appreciably higher. So you want to be able to hedge your bets here, if you will.
All right, and turning back to California now, do you think we will see $8 a gallon gas now that the Valero refinery is set to close at the end of this year, and the other refineries set to close next year? Already, we're paying, of course, a lot higher than the rest of the country. $4.47, the average price for regular gas here in the Los Angeles area. The average nationally is $3.13, by the way, and diesel at $5.10 a gallon on average here in the Los Angeles area. The national average is $3.70. What are your thoughts on where gas prices go here in California?
I think, Frank, absolutely. You're potentially in for that because with these refineries closing, with all the other harsh California regulations, any upsetment in the global oil market is going to rip through to California, and you're going to see $8 a gallon. There's no question about it. You are set up for a tumultuous time, and that's, I think, why Governor Newsom finally came to his senses here and is going to try to work with the industry.
That's very interesting. On the air live with oil industry analyst John KILDUFF at Again Capital and CNBC contributor. The fact is California is swimming in oil. 100 years ago, California accounted for 25% of the whole world's oil production. And the La Brea tar pits, if you drive by there, the tar pit, that's actually oil coming right out of the ground there where that museum is, where they're still excavating for dinosaur fossils. I'm sure you've seen that, John KILDUFF, that oil pit that's right there. Shows how much oil we have. We're swimming in oil here in California.
Frank, I'm glad Governor Newsom has woken up to the fact that California should be and is an oil powerhouse, and there's no reason for you guys to be paying the kind of prices you're paying at the pump. And, build a bridge to the future. Just don't burn down the one we need right now has always been my mantra.
From an investment standpoint, we talk about consumers at the pump as well as what's happening on Wall Street. Anything that looks attractive to you right now in the oil patch?
Stocks have been hit hard, Frank. I'll tell you, I think given what I said about the potential for prices to go appreciably higher, especially natural gas, stick with the big majors like I've talked about here over the years, EOG Resources, Chevron, ExxonMobil, the refiners, Valero. That's the place to hide out and have a portion of your portfolio. If you're buying Bitcoin and you're buying gold, you need to have some hedged money in oil.
Black gold, as it was known for years, certainly on the Beverly Hillbillies. That's how we first learned about that. What about natural gas and anything else, any other ancillary energy plays at the moment?
I think the natural gas plays, when I talk about EOG Resources, Frank, that's the main one to go with here. Natural gas is going to be a spectacular story over the coming years here. As these data centers get built out, as the electricity demand grows, that electricity supply is going to be met by burning natural gas.
John, thank you very much for taking the call here today. That is John KILDUFF, oil industry analyst at Again Capital, CNBC contributor, and, of course, longtime contributor here on Mottek On Money on 790 KABC. Recapping the oil number here, oil up 25 cents at the moment at $62.60 a barrel. We see Valero shares of $1.12 at $137 and change. ExxonMobil of 70 cents at $107.42. Let's bring up some of the other oil names here. For example, Chevron, of course, which is also moving its headquarters from California to Houston, is moving lower today, down $1.61 at the close at $152. Recapping the day on Wall Street, the Dow moving higher. In fact, made a run for an all-time high today, intraday, and ended slightly higher, up 10 points at 44,922. The S&P 500 down 38 at 6,411, and the NASDAQ down 315 points at 21,315. We're on record high watch for the Dow. Maybe it'll happen tomorrow. We'll see when the notes from the Fed's last policy setting meeting come out. That could be a market driver. And a lot of moving parts, of course, as we just discussed with Art Hogan live on the air at the top of the show, and just now with John KILDUFF, prominent oil industry analyst, live with us here on Mottek On Money on 790 KABC.
Hey there. I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because, let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Mottek On Money continues here in 790 KABC. Good afternoon. You've probably heard of the Make America Healthy Again effort in Washington. Well, here in California, there's an effort now to make California healthy again, with a focus today on what kids are eating and ultra-processed foods, and some new bipartisan legislation they're talking about in Sacramento. And joining us live now from Sacramento is Bernadette Del Chiaro, the head of a group called EWG. That's the Environmental Working Group, a nonprofit, nonpartisan group that empowers people to live healthier lives here in California. Bernadette, thank you very much for taking the call here this afternoon.
It's great to be here.
Wonderful to have you with us. Tell us what's happening there today and this bill that I understand you're supporting. That would be the first of its kind to define ultra-processed food that is making its way into the school food and our kids. Give us an update on what's happening there.
Yeah, that's right. We're working with a lot of organizations. It's a bipartisan bill, as you mentioned. We're working with End Chronic Disease, the American Academy of Pediatrics, lots and lots of local farmers to tackle a first-in-the-country piece of legislation that would define what is an ultra-processed food and then begin to take the worst offenders out of our kids' meals at schools. UPFs have been linked to rise in diabetes and heart disease and mental health problems in kids, and we really need to get them out of the kids' diets. In our kids' schools, this is actually where they're getting them. A lot of our kids' schools are getting ultra-processed food right there at the lunch counter. So AB 1264 by Los Angeles Assemblymember Jesse Gabriel would phase it out of school lunches, and it's a really exciting, real change, real progress for our kids' health.
Very interesting. Ultra-processed food, UPF for short. Can you give us some examples of what type of foods we're talking about there?
Yeah, I mean, it's you'd be surprised how many foods have hidden ingredients. Ingredients that if you looked at the label, you'd never be able to pronounce them. You couldn't tell what they do. You would never find them in your kitchen at home. And these are chemicals that are actually designed to make food addictive. And they often come with things that are high in fat, sugar, and salt. And so we're literally poisoning our children right when we're trying to get them and help them learn. And when you eat bad food, we know that our brains simply don't function correctly. And so we're really doing our kids a huge disservice by feeding them these ultra-processed foods. And they come up everywhere. They can be in a highly preserved piece of bread that comes with the kids' hamburger in the lunch line. So we just think, chemicals staying in the chemistry lab at school, they don't belong on the lunch plate, and we should be serving our kids wholesome, nutritious food that helps them grow and helps them learn.
Very important point there. So not only in food, but in drinks too. Soda, I understand, have these things too, right?
Yeah, absolutely. It can come in beverage. It can come in ultra-processed foods or beverages, as well as snack foods. Again, it can come in the pizza that's served microwaved in the microwave oven and served on a plate. I mean, you just would be surprised how many hidden chemicals and toxins are in these foods. And what is so exciting, though, is that Americans are really waking up to this, and Americans from all different political backgrounds, and they're demanding change everywhere from Sacramento out to Washington, D.C., and we're really optimistic that we're going to make history here, and California is going to lead the way in helping get rid of some of the worst offenders from our student lunches.
Right. So the focus of attention is getting this out of school meals, school breakfasts, and lunches, right? So this is where does this thing stand right now? It was just introduced today, right? What are the prospects for this going through?
Yeah, it's something that's amazing to consider is we serve over 1 billion meals to school kids here in California. every year, and that's more than all the top fast food chains combined. So it's a huge amount of food that's passing through our student lunches and right into our kids' bodies. So it's a really important place to make change. The bill was introduced, and it is right now in a key committee, a Senate Appropriations Committee, and we're hoping that it gets out of that committee next week and moves on to the Senate floor. Anybody that's interested in this issue, we'd encourage everybody to call your state senator and urge them to vote yes on AB 1264, the ultra-processed food bill.
All right, so this is getting attention not only among politicians, but also doctors too, right? I see you're working with one of the top people at Children's Hospital Los Angeles and at USC Keck School of Medicine as well. What are they saying about this?
You know, doctors all over the state are coming together to support this legislation because what they're saying is, you know, statistics are one thing, but they talk about patients and what they're seeing in their exam rooms are kids that are really suffering from diabetes. They're suffering from mental health disease. They're suffering from just, you know, weight gain. And they're just, we have a real epidemic in this country, and it's in large part what we're feeding our kids. And the doctors are really rallying to our support. And also encouragingly, farmers as well. You know, California is, of course, the farm to fork capital, and our farmers are eager to serve our kids and be part of this, you know, historic moment to get whole foods, good foods, California-grown foods straight into our kids' bellies via the lunch line.
And certainly what's coming out of Washington with the Make America Healthy initiative. Looks like we have a similar initiative here now focused on California. Coming out of Washington now with this new effort that this has been recently bringing new attention to these very important matters, right? And now it seems to be coming here to California.
Yeah, we're really excited, actually. Over the past couple of years, California has teed up and passed some of the strongest food safety laws in the country. It is now spreading like wildfire. There's a real movement all across the country. In the past year alone, 6 other states have followed California's lead and passed similar bills to phase out food dyes and other toxic chemicals from our foods. And so we're really just seeing this movement sweep across the nation. And, you know, we're just thrilled by that because this is what government should be doing. This is how government should be helping people. And we're seeing that kind of bipartisan support, you know, rising up from the grassroots and getting our politicians to do what's right for our kids. It's a really exciting time.
All right. And what's your website there for people to follow your work?
It's www.ewg.org. That's EWG, which stands for Environmental Working Group.
Terrific. Well, thank you very much for speaking with us here on a big day there in Sacramento on the focus of giving kids healthy food up there and getting rid of the ultra-processed stuff in that food. Bernadette Del Chiaro, the head of EWG, joining us from Sacramento this afternoon. Thank you very much for taking the call live with us here on Mottek On Money on 790 KABC.
YouTube personality Benny Johnson has cracked the code on a new era of newsmaking.
And, you know, we have some major members of the White House team that will be joining the program. I know it makes you uncomfortable. It makes me uncomfortable. But, ladies and gentlemen, sometimes you just got to dive right in and say, well.
It's a new cultural landscape.
This is the proper messaging. Thank you. Let's rock and roll.
The Benny Show. Follow and listen on your favorite platform.